Right. Today we're covering combining Bollinger Bands with other indicators. If you could just type a Y in the chat box, if you can see the PowerPoint on the screen there. We're going to be doing PowerPoint for a little bit, just some background on Bollinger Bands and other indicators. And then, thanks, Larry. After that, we'll have a look at some live charts. And got a couple of scans that I modified to add some Bollinger Band action into them. So as I said, my name's Steve Hill, CEO of AIQ Systems. We're trying to do at least once a month one of these sessions covering different topics. And we haven't done Bollinger Bands for a long time. And John Bollinger created these bands many, many years ago. I think probably more like 4 decades, thinking about how long back in time that was, maybe even longer. We'll look at how they're calculated briefly in a minute. And John, I've met him a few times. He spoke at our seminars back in the 90s, and he's still out there doing BollingerBands.com if you want some more in-depth information on the bands themselves. We're going to be taking it from the point of view of what we do in AIQ, the Bollinger Bands, and then combining it with other indicators that we have within there. So let's get started because time is of the essence. As I say, the first here, combining Bollinger Bands. Let's start with the basics. Real quick, they're pretty much an upper and a lower band. There is a middle band you can do. We don't show that in AIQ. We just do the upper and lower bands. And pretty much, I mean, they're just moving averages with standard deviations. The default is 2 standard deviations away from the average. So that gives you the encompassing band themselves. You'll notice here the typically 20-day simple moving average is the sort of default setting. So that gives us the basics for the band. We won't be using the middle line, as I said, because we don't use that. We don't have that in AIQ, although we could create it if we wanted to. What we're going to look at here is some of the different things, just real briefly, that the way John created these bands and how to use them. So there's a Bollinger Band Squeeze is the most well-known, I think, of the techniques using Bollinger Bands. It happens when the bands squeeze together. They get closer to each other. The upper band starts going down, the lower band starts going up, and it gets closer and closer to the price action. Happens always with a period of low volatility, and we'll see that in a chart as well. Often a precursor to a breakout or a significant price movement. It can be. I've seen it also precursor through moving sideways. The second level from the Bollinger Band Squeeze, that squeeze happens, and then after that, if it breaks out, squeeze is a move to the upside or downside. Breaking above the band or below the lower band tends to be a better trading opportunity, although you might miss a little bit of the first sort of few days or more of the move within that direction. So that's the squeeze. That was the classic interpretation of the Bollinger Band. The next area is adding some price action in here. And I've got this set up to look at a little bit later. There's a lot of different things you can look at, but one of those looks at, which tied into what we've been doing in sessions before, is looking at price action, something that can be used with Bollinger Bands. And one such price action is that bullish, bearish engulfing pattern, which in previous sessions, by the way, you can always go to aiqeducation.com, have a look under either the blog or under the, there's a webinars section of 2024 webinars. You can see some of the sessions on the Bollinger Band, not the Bollinger Bands, on the candlestick patterns that we've done before. I'm going to tie bullish engulfing, bearish engulfing pattern in with some Bollinger Bands. Makes for some interesting confirmation for us. The squeeze, of course, we'll look a little bit at that. We'll look at the Bollinger Bands with price action. Another interpretation, which is when it touches or exceeds the upper band, that's a possible trend reversal. That one happens sometimes, but quite often it gets to that band and just travels up the band and wanders either side of it. The interesting one with the double bottom, and I haven't seen it so much on double top, if the Bollinger Band comes down and pierces the lower band and it's at a double bottom area or close to a double bottom area, that tends to indicate a good possibility of a reversal. So again, another way of looking at Bollinger Bands in the trend reversal. And this leads nicely into the riding the band, because it can drop down to the lower band, pierce the lower band, and then ride that band down. And obviously, in the opposite direction, when it hits the upper band, this can happen again. It can pierce that band, moving right along the band. Quite often, it moves right below the band with just the high piercing the upper band on a regular basis. I find this is harder to interpret for trading because, again, you don't know how long it's going to continue in that upper band area. Obviously, if you're in the middle of a fairly significant continuing uptrend with very few pullbacks, you have a possibility of riding those bands. So again, this ties it in with the band breakouts. When it breaks out above the upper band. So sort of strategy, a trade breaks out above the upper band or breaks out below the lower band. So when that happens, this could be an indication, it's a buy signal when prices close above the upper band. And when that happens, so that it's kind of like riding the band itself. It doesn't spend a lot of time outside the upper band. It can't move too far away from the upper band, simply from the nature of the moving average and the standard deviations. Is designed to capture two standard deviations. The vast majority of price action is within the band. So bear that in mind. But this is really a breakout of the upper band. If you get big volume when that happens, same on the breakout to the lower band. You could see that that's going to continue in that same direction. And especially if the band breaks through the upper band and the band has been going up. Occasionally you get a break through the upper band and the band is flat or going down. So that seems to me to be less significant. And of course, combining Bollinger Bands with volume, using high volume on a breakout. So this continues on that breakout to the upper band or breakout to the lower band. You got to have volume on it. I mean, if it breaks out on the upper band and the volume's been fading away, looks like buyers have disappeared, and so that might not be a great signal. On the same thing on the lower side, if it's exhaustion and selling, we break down below the lower band and it sort of waffles down that area, the volume's not great, probably not going to continue in that area. Of course, the opposite's true. If you get big volume and it continues, or significant volume continues at the pace, then it may well indicate that the trend will continue in that direction. And for it to reach the upper or lower band, it takes quite a bit of momentum on a stock to do that. Because we're using a 20-period moving average, that means the last few days, price action got to be pretty strong to have reached up to that higher edge of the upper band, or fall to the lower edge. Either way, it has to be fairly significant for it to push itself to that 2 standard deviation moving average. So that was it on the PowerPoint. Just wanted to get a frame on what we're going to look at here. Let me just escape out of this and we'll bring up a chart for you. And the chart's up here on the screen. I think what we're going to do first off actually is I'll go back and look at what we've done in Expert Design Studio for this session. And there's 2 things we're going to look at, 2 specific areas, because time is tight. We're going to look at the Bollinger Band Squeeze for potential changes in direction, and also we'll look at the bullish and bearish engulfing pattern, which has to happen close towards the upper or lower band, depending on what signal we're looking at here. So, if you remember when we are looking at the presentation here, let me just pop that back up here because this is important to remember this. There it is with the price action. Bullish engulfing pattern near the lower band, bearish engulfing pattern near the upper band. Signals a change in direction. That's the first one we're going to look at. So let's recap on what the bullish and bearish engulfing patterns look like, and then we'll tie the Bollinger Band into that. So this is Expert Design Studio. Those of you who are familiar with this and use this on a regular basis, this is our tool for building trading strategies. And of course, it also has a large number of built-in strategies in the system. In this case, we even have all sorts of Bollinger Bands already. All of these are in our ADS strategies folder if you're using the system. And again, you can take any of those strategies, manipulate them yourselves, run them on a database of stocks, any database you want that's in the system. and see how effective a strategy is for making stock selection. So in this case here, again, I always remind folks who don't care for the coding in here, it's relatively easy to do this coding using the builder in here. You just right click in this area and do builder. You can start a new file of your own and actually copy and paste components, different indicators and different circumstances, different what I would call signals, you might say, and create your own strategy. So that's all doable in here. Let's start with the first thing, a bullish engulfing pattern, and then we'll look at Bollinger Bands in relation to that, because that is one of the techniques that is out there. So a reminder on the bullish engulfing, it's a strategy, a candlestick strategy that allows us to find a trading day. Remember, this is bullish, so it's pretty much you've had action's been going to the downside. It may not be for a very long period of time. Then you reach a day where you get a red candle, and then the day after the red candle, so the red candle is your bearish candle, you get a green candle, or as we do it, which is an open green candle, where the body of that candle completely encompasses the previous day's candle. And it's when I say the previous day's candle, I mean the candle body. It doesn't matter so much about the tail or the head, which is where the high could be, or the open is going to be. The thing we're looking for is this. So let's look at one in here. The first one we're looking at, this here is a bullish. So when I do this, let's go here. I'll move that out of the way. This candle here, you see this green body right here, completely encompasses the solid body right here. So that's an engulfing bullish pattern. And the reverse of that is going to be the engulfing bearish pattern, where the body itself, for example, even Microsoft here, leave the cursor up there, the red body here is completely encompassed the green body here. Don't worry about the tails. That's what you're looking for. This is this pattern here. When you see this pattern, when you see this is a bearish indication. When you see this is a bullish indication. So we have a rule within our trading strategy system already in place here to go find stocks that meet both of those criteria. And what we'll do is we'll look at using the Bollinger Bands in conjunction with that. So remember, it's a better signal with Bollinger Bands when the bullish or bearish engulfing pattern is closer to the band. So this is the classic case here. Bullish engulfing pattern, this is engulfing this bearish bar closer to the lower bands, buy signal. Closer it is, the better it is. Over here, you've got a bearish engulfing pattern encompassing the previous day's body, but this one's not very close to the upper band. You want it to be closer to the upper band, more like this up here. Although I think that one's still, that's a red one there, so that doesn't really count as an engulfing pattern. But for a bearish engulfing pattern, for example, this one here, this is green, this is red, this completely encompasses that body, and it's towards the upper band of the Bollinger Band. That's a good signal. Those are the sorts of signals, an interpretation that it's also on BollingerBands.com website. So what we did is we popped into this strategy again, and I'll bring this back up here. So candlestick bullish engulfing, candlestick bearish engulfing. There are other confirmations we were doing for confirming both of these patterns using different techniques, like a 5-day slope and adding a volume confirmation. In this case, we're just going to take the candlestick bullish, the candlestick bearish, and use Bollinger Bands as our confirmation to see what it looks like. So I ran this on 7/16. So this is July of this month. I ran it on a relatively small database, so I don't have a huge number of stocks, just the S&P 100 in here. And what I was doing is I'm just looking for the engulfing bullish and the engulfing bearish so that we can look at those within charts with the Bollinger Bands themselves. So in the charts itself, when I bring the charts up here, you'll notice that the upper and lower Bollinger Bands are selected. I have saved these indicators in here. I also happen to have volume at the bottom here because we'll be looking at that later. So we already have it created and ready to go. when I'm back in here, as I ran this strategy on 716, it already gave me engulfing bullish and engulfing bearish. Remember, S&P, the S&P 100 is the stocks we're running it on. So these stocks on 716 had that pattern. And I've actually, when I click this button here, this is chart list, it actually creates a chart list for me of these stocks and pops it right into charts for me. I've already done that to make time of the essence for us. So you see the stocks here, 1, 2, 3, 4, 5, 6, starting with Lynn and down to Starbucks, which not surprisingly is the one that was in here. And this is the list I created. When I was in Expert Design Studio, I said, make me a list. I'll call it 716. That's the date. Bollinger Bands, and I've got here it's candlestick bullish. It's the encompassing bullish. And so the stocks that met that criteria, I can scroll through here, and let's get rid of this Microsoft one for the moment. And so remember, 716 was the date this was run. And the stocks that are in here, let's go back to the beginning of the list. And it's Lynn. So remember, there was like 5 stocks, right? The S&P 100 that had the engulfing pattern. The interpretation that John Bollinger has of the Bollinger Bands, this is again bullish engulfing pattern towards the bottom end of the band, is a better signal for us. So what do we have here? 716 was the date that we did this. This body is just encompassing the red body the previous day, but it's towards the upper band. So that doesn't qualify for us as far as being, number one, it's got to be the engulfing bullish. Number two, it needs to be closer to this one. And you can see, price action was fairly flat after that. We move to the second stock that met that bullish engulfing criteria. This is Lockheed Marietta. Here's the bar here that encompasses the entire previous red bar here. This one again was kind of towards the upper band. You could have taken in here, but you'd have to get in on this day. Remember, this was the day to signal 5, end of the day. So we get in the previous day. Hasn't particularly moved very much since that time. But notice where this is. It's towards the middle rather than towards the lower. Third one here. This is the band again, right in the middle, right in the middle. There's the bearish one. There's the bullish encompassing, the engulfing. And again, next day it just kind of went nowhere. It was McDonald's. And so let's look at another one. So this one here is a little better because what we have here is that the price action is towards the lower band, although things haven't moved particularly well since then. This is more like what we're looking for. We're looking for this type of situation, bullish engulfing pattern right down or close to the lower band, and you get in over here. So the next one is, let's see what else we have in here. I think there's 2 more in here. Medtronics, this one's right the way up here. See, this one was like in the sort of middle towards the lower. This one didn't go very far, but it is close to the lower band. I think the closer you are to the lower band, the better it is for the bullish pattern. And Starbucks was the one right there, lowest, and this is sort of entry point next day where this line is. And prices have moved up a little bit since then. So that's a bullish engulfing with a lower Bollinger Band, and you've got to be close to that or at that lower Bollinger Band. So that takes 2 criteria there. And one of the criteria John Bollinger has is that touching the Bollinger Band can be signs of a reversal, or can be the sign here, and then it rides the band. And it just goes in and out, right in the band because there's a strong trend in place. This type of pattern here, and I just want to digress on this, so I change the date to this so you can see this. This type of pattern, I'm experimenting with this system. I switched off a couple I'll do shortcuts. So this type of pattern comes down, and it's this band here. In order for this to be hitting the band and to buy signal, it needs to have a lot of volume, or volume needs to be increasing. what's been happening here is that the volume has been descending. And look at the volume here. It's really gone down. So at this point here, there's volume, there's very little volume happening. So you don't really have a decision. You might think it's exhausted, but then the volume picks up here. So you're not seeing a sort of an exhaustion point there. But when you get to here, look what happens here. It keeps on riding just inside the band for a little bit here, if this away from the band. If there's good volume, it can drive it away. You can also see, as I say, if there's lots of sellers coming in, this volume here could be much more significant. Be much more significant. So it's this riding the band, and you do see this happening, quite a lot within Bollinger Bands. It's a difficult one, I find, to interpret. And especially when you get like this one here, it broke out through the bands. We'll look at the squeeze in a moment because that's a classic squeeze there. And I think I've mentioned earlier, squeeze, you sometimes get this thing where it goes sideways for a while, and you tend to need a pattern. We'll look at that in a moment. So that's the bullish engulfing pattern. There's some, it's not bad. It's not bad. There's a good, there's a good reason why it's working. That it's come down to that lower band, and you've got a price action. You've got that engulfing bullish pattern in place. The flip side of that, of course, and I'm just switching back here to the engulfing bearish pattern. Remember, so that's the solid red bar body encompasses the previous day's green solid body. And in this case, we've got 4 stocks out of the S&P 100 that met the criteria. I'd already clicked the button and built a list for this, so we don't have to do this. And this is on the 716. I've got a lot of lists in here. And I think this is going to be this one. Is that the right one? He says, quick trip back. Yep, AVGO, there it is. So AVGO, we got 4 stocks, 716. So the date here, this is the date it was run. I'll move the cursor to the next day. So in this case, we're looking at 2 things. Of course, again, this time it's the bullish of the bearish engulfing. You've got the bearish engulfing pattern here. The body's completely engulfing the body of the previous green bar. And we're looking for it to be close to the upper band. And again, this one's fairly in the middle. Although, in fact, price action dropped on this day here. It didn't really move much from that point. And I picked this day because it's a hard day to, because not much happened afterwards on a lot of stocks. And it's, the pattern itself does indicate there is something changing. When you get the engulfing pattern, we already know that. And trying to get it closer to the Bollinger Bands, I think, increases the significance or the possibility of a significant move. So that's AVGO was the first stock in there. Second one was our friend there at Google. So here's the pattern here, engulfing right here. It is closer to the upper band, and it did move down a little bit. It's not a bad opportunity there when you kind of got to be knocked out pretty quickly here if you stayed in that trade. Next one here, again, this is another Google one, so it looks just like the other one, although, yes, in fact, that's the Google A, the one that's less expensive to buy. So similar type of thing, it is more towards the upper band. The higher it is to the upper band, the more likely it's going to be a better signal. Again, of course, we're doing a short list of stocks so that we can try and make this get through as much of this as we can. So here's another one here. This is Microsoft, which was interesting. So you're kind of in between the middle of the bands here, and it did drop down. You have to be pretty nimble to trade this, actually. And again, it popped back up after 3 days of moving down. So there is, I mean, you can see there is some relevance to it. The closer to the upper band or the lower band does make a difference, but I think you'll also appreciate it in situations like this. This is like a continuation, like a little you've had a little move down and you've had a little sort of a period here where there's not a lot happening. And then suddenly things start accelerating down again. So we're able to capture that because what we have here is that engulfing pattern, the bearish engulfing pattern in place. So yeah, that's one interpretation. I think if the closer it is, the real close to the bands, the more powerful the reversal is likely to be. So let's pop back into that PowerPoint so I can just so we just covered there the engulfing bands themselves. I'm going to go back here and we'll have a look at the Bollinger Band Squeeze itself. So the bands come together indicating a period of low volatility. often a precursor to a breakout or significant price movement. Look for breakouts above the band or below the lower band for trading opportunities. So the squeeze can happen, often happens when price action is still within the bands. The secondary level of confirmation is when price breaks out above or below the band. There's a lot of discussion about how long you have to wait for it to have broken out in order it to be significant. I would suggest it has to be within a few days. So what I did was I just took the standardized, this is another EDS strategy. I've just opened up the second one earlier. This is Bollinger Band Squeeze, which is actually in your system. File open, and it's going to be in your WinTest 3.2 folder, although mine's called WinTest 2024 as I'm working on some new features. And EDS strategies, technical indicator strategies within EDS strategies, strategies using one indicator, and then Bollinger Bands. So you can see we have a load of these in here. There are 4 Bollinger Band related strategies within there, simple strategies. I open the Bollinger Band Squeeze, and the way it is defaulted in the system, boy, that's a long time ago, 2001. Shows you how long we've been doing this. The default setting in here uses slope of 5 days. So it looks for the slope of the lower band to be going up for 5 days, and it looks for the slope of the upper band to be going down for 5 days. It doesn't really care, how big a slope is. I changed that because 5 days isn't really significant enough. I put this to 20 to try and cut down on some of the noise that we get when you have it at 5. It's a very simple slope, so some of them not going to look great, but it does give me a much shorter list. I say much shorter because I ran this again on the short list, again, of the NASDAQ 100 in this case, rather than the S&P 100. So it's 100 stocks. I picked 7, 8 because it's I know there's some squeezes on that day, and in this case, for those 100 stocks, there are 16 stocks that have a Bollinger Band squeeze. A very simple interpretation for us of what that looks like, but it will show the good squeezes as well as some of the squeezes that might have come a few days earlier, because we're using slope, and slope is in and of itself over a period of time, and there could be some fluctuations within 0 days and 20 days. So this, I already again created myself a list for the squeeze in here, so that cuts down on our time in doing that. So in this case, and it's 7, 8. Boy, I have so many of these there. So by the way, when I do scans like this, I always put the date first and then some abbreviation that tells me what it is that I scan for. Otherwise, I have no clue what I'm doing. So 7, 8, BB, and SQ for squeeze, right? So you're limited by the number of characters in there, which is about 8 characters. So I created this list. Remember, there was like those 16 stocks in there, and the here again real quick. First stop is AAL, last stop is VRTX. So let's shut down Microsoft here. And remember, this is 7, 8 was when we ran this scan. This was on 7, 8. So when I'm back over here, I put the cursor on 7, 9. Remember, in this case, it only looks at slope. The slope period is based on 20 days. So ideally, and this might take some some finessing on the actual scan itself, you'd like to know when the squeeze reaches this point. But is the squeeze starting here already? Some of this is more art form than a technical or a objective look. This is definitely a squeeze. It is. What's made this really wide is because you had this big fall down in price, and that's made the bands move far apart because the standard deviation from an average of price, the average is now really volatile looking. So these types of squeezes, I don't really like the look of, because this is hard to interpret because you've had this big fall in price. The squeeze continues for a little period of time here. It doesn't really give us a lot of information on its own. The squeeze itself, the technique that we're looking for as well, is for it to break out of the band, either up or down, for a continuation in that direction or a change in direction in order for it to be a valid squeeze. In this case, though, there is minor breakouts here. The key thing you look for is really volume. You look for a good volume, but it really needs to happen somewhere in this period here. Let me just move to another stock here. So this is a better looking squeeze happening. The squeeze began back here. The significant breakout didn't really happen to the downside at all. And again, it just started to move its way along the lower band. This is definitely a squeeze. There's no doubt. I mean, the bands are moving down. This one's moving up. There is a squeeze on there. The volatility, the way you know it's happening is when you put on the volatility, when you get to this point here, look what happened to the volatility. It fell off a cliff, right? So this is the sure sign, Bollinger Band Squeeze is a sign of low volatility. There's going to be a change in direction. In this case, you need to wait for a significant breakout of the bands because nothing happened here, nothing happened here. It looks like it might be breaking out up here, but that's really, the bands have started to move away from this squeeze point. The squeeze point is what you're really looking for. So again, this happens with squeeze, with the squeezing of the bands. You see this type of period here where this fired here because these have both been sloping in towards each other. There's no significant breakout. I mentioned that early part of this session, the squeeze, you do tend to get these sideways things happening as well. This over here, and I looked at this earlier on Biogen, this is a more exciting squeeze because what happens here is you get the squeeze, been a reasonable price action going on here. It almost breaks out from there, but then it continues down and follows the lower band down. How do you enter that? Well, that's not the breakout of the upper band or the lower band. There's no significant breakout at all. I found it very hard to find a significant breakout of a Bollinger Band squeeze as the classic interpretation works. Breakouts here, by the very nature of these bands, if you break out, it's more than likely either going to continue following in the same direction, or you might end up just doing like this, which goes up for a little bit and comes back down again. I like the fact that the price action quite often stays within the bands itself. A touch on the lower band like this, which we had mentioned earlier, being a reversal signal, you would normally need a significant volume event to make that happen as a signal. So rather than the squeeze, this is hitting the bottom band again. So in this case here, this is the other interpretation: hit the bottom band or the upper band with significant volume. Do we have significant volume on this day here? No, we don't. So I'm not so sure that's a great signal either. And I've seen that, again and again, even though you can clearly see that it moves between the bands in here. Pretty good. I mean, once it hits the upper band, but it's hard to know if it's going to be one of these where it reverses or it hits the band here and it just continues moving to the downside. The key thing I think here is the volume itself. The volume here is continually, slowly sort of draining away, but there's still sellers coming in and it's continuing in that direction. There is no difference I can see between the volume on this move down that's following the lower band versus here, the volume that follows this bounce off of here. The only real difference here is what's happening with the Bollinger Bands itself. And this is, I think, the key thing to look for, which we don't have an EDS strategy for at the moment. But what happens here is the squeeze occurs, right? The squeeze occurs, but the lower band itself has started to fall back away. The squeeze here didn't happen, but the band is moving up. If the lower band is moving up, it's almost certain that price action is beginning to move away. And you can see it the next day. That versus what's happening here, where it's actually beginning to fall down. So I kind of think that when you see a touch on the bands down here, if it touches the band, and then the bands themselves are moving, this band is moving up, that's a better signal than if it touches the band and the band is moving down. Just go back into the strategy, so Bollinger Band Squeeze. So look for a breakout above the upper band or below the lower band for trading opportunities. Isn't that easy to do? I'm still liking the candlestick pattern together with the Bollinger Band. So you got that engulfing towards the upper or the lower band. So Bollinger Bands with price actions. The next thing we're just going to have a look at. So in this case, we've already done the bullish engulfing pattern. Forget that one. This is the one, Bollinger Band and trend reversals. So we've said that when it touches the upper or the lower line, but it can happen with a double bottom pattern. And I didn't know this one until I started researching this, that if it hits the lower band and you've got like a double bottom down there, or the same with the upper band and the double top, that could be a trend reverse. So now we know double bottoms and double tops. Once they've completed that pattern, once the pattern starts to move away from its top or its bottom, we know that's a very well-known pattern. But if it's done in combination with Bollinger Bands, so this could be quite good. Now, part of our problem for us in our EDS world or trading strategies is building a strategy for a double bottom or double top is very challenging. Patterns are a very human-centric thing. We can see patterns where a model has a hard time identifying them. How close are the two tops to each other? What's your wiggle room between the value of one top versus another top? How many days does it move away? The price pattern between the tops, how smooth a V shape does it need to be? I mean, what is a double top, or what is just the two topping areas? We can all see those in charts, and I think it's when you have that in combination with a Bollinger Band, and it's actually just touching or very close to the band, I think it's pretty good, which is why we go back to this Biogen here, because this isn't bad. So what you have here, let me get the trend line tool friend going here. Here's a really nice topping area. Oh, look, my colors. I can't even see my colors on my trend line. It's in black. Doesn't help me. And let me get down to trend line. There it is. We'll go with yellow. It's a nice color. So I think there's 1, 2, 3 sort of topping areas in there. What's significant is it's almost right at the Bollinger Band itself, and that's pretty good. So I think that's actually quite a good confirmation. Price hits the Bollinger Band or gets very close to it. If it's a double top situation, it seems to be a pretty good opportunity. And the same applies on the downside. And to find a good example, this is a great example. I mean, this one here, it's hit the band there, and it's a sort of very short-term topping area. But again, you could play it short on either of these 1, 2, 3 moves for a small gain to the downside, or buy some puts even. Let me just go through, because this list, remember, this was the list of the squeeze, and let's have a look at another one in here. Oh, trend line crazy on this one. Let me just get these out. Cisco. So we had a squeeze here in July. This was the squeeze list. Yeah, again, not a very good looking squeeze. So we'll go straight past that one. But I'm also looking out for double bottoms to see if we can see this in combination with Bollinger Bands. A good looking double bottom. That one's again, so this is a little bit of a squeeze, but not huge. That one, we can see it. That's a pretty good squeeze. This is the first example we've seen of the interpretation of the squeeze. Remember, 7-8 was when we generated this. 7-8 was the initial with a low volatility. Wait for it to break out before you get into it. This one's actually an example of it working pretty well on Garmin. And it did break out, and the volume popped up a little bit. So it does, there is a case for that. You need a good breakout, and you need some volume to go along with it. Not a huge spike on the volume there, by the way. Let's see another one here. Looking for a double bottom pattern, really. And it's you get some examples, but not too many. Let me move on to the next one. Yeah, you can see the squeeze right there. This is another one with the squeeze. When we generated this for 7-8, I mean, this is actually squeezed here. It's found the squeeze was over 20 days. And then the breakout was very quick, though. I mean, it offset away from the bands, but there was a spike in volume, short-term trade for a modest gain. Intel. I was doing a one-on-one with someone the other day, looking at the Dow, one of those that's not done well. And then you look at some of the others like Apple, and it's a real interesting map out there. I digressed. So what I'm trying to find here is a double bottom for us. So here we have one. This is quite good here. Again, touch the band here. It touches the band, it very touches the band a lot in other places, but when it does that and you've got a bottom in place, it's not a bad signal. It's a pretty good signal. So when that happens, again, this move, there's nothing here on the volatility. And this is not this, even though we're looking at the list of the squeeze stocks, the volatility when you get back down to this second bottom here, first bottom it's here, second bottom it's here. There's a little thing. There's been an increase in volatility at that time. So what we're seeing here is there's definitely something happening when it reaches the bottom here. Look at the way it moves away from there, from 15 point, maybe just under 16 up to close to 18. That's in just a few days. That's a pretty good move. Liberty Global. Let me get the volume back here. Next one, and again, it's looking for double bottoms here. This happens again. You see this with the band. It gets trend line. There's definitely a bottoming area here. Comes up to the upper band, comes back down. We get close on almost to the bottom band, and it bounces away. Volume picked up on the way out. So this is quite good, I find. I find the double bottom and double tops, when they hit the bands themselves, look pretty good. Again, what is a double bottom and what isn't? I mean, you could, this here could be a double bottom, but it's only over a short period of time. I mean, that's really stretching it, but it's nowhere near the bands down the bottom there. So again, it depends on what's happened to the price action in between the two bottoms. I think that you get a pretty good signal when you have double bottom or double top right at the Bollinger Band itself. And it doesn't matter whether the band is going up or going down. It just matters that it gets very close to touching the band itself. One of the last things we looked at in the slide was the actual, I won't bring the slides up, was writing the bands themselves. I think I mentioned this is a hard one to know what to do as far as a trading decision is concerned. Let's see one that's really doing a solid ride on the band. I mean, there's lots of good. Here's a great example. So Texas Instruments. I mean, it's cut down here. It's up here at the upper band. So, I mean, you get it on this day. If you're sitting on this day, which is what, this is back 5-8, and let's go back there. Oh, went too far. Yeah, so, I mean, any time along this area here, how would you know that this was reached the end of the move to the upside, right? I mean, how would you know? You see that here? I mean, you're close to the upper band, but it's close to the upper band in other places, and then it's moved back down again. So it's here and it comes back again. It's hard to know the entry point here. Hard to know you're in a trend, except when you see this, right? When you see these bands are very, very far apart, you know there's a very strong momentum in one direction versus the other. So it is possible to ride that, and I think if you follow the band up, look what happens when the band keeps going up here. It's still good when the bands are widening. There's a little bit, look at the lower band here has begun to change direction, moving up. There's a little bit of increased momentum there. What we really want is that upper band to begin to fade away. And that does happen right at the peak here. See the peak here, it's rolled down. Of course, it's already made a move down. These are moving average beasts. So you're bound to be behind the times, as they say, but still, that's a sign that maybe riding the band is over. This is a really good example of being able to ride that band. So yeah, that has some significance. Once it's moved away from there, the riding the band is definitely over for this particular move. But yeah, if you see that, you get wide bands. It follows the band up. As long as the band keeps rising, the price is still there. I mean, here, you might be worried about it, but the band's still up. When the band rolls over and you've got the red bar, you know that it's pulled away like that. Sure, you're going to get back 3-4 days worth of your gain, but it's probably time to move on. Any questions? Yeah, Dave. Yeah, good to see you. I'll get the recording to you. You'll all have the Dave. My 45 minutes. Our schedule's kind of busy at the moment. You wouldn't think it would be busy in the summer, but I think a lot of folks, especially out here, are staying inside while the weather's really, really hot. So, and we're kind of busy at the moment. Questions, pop them into chat, send me an email, send it to shill@aiqsystems.com, and I'll have this recording available for you. I'll pop in those EDS strategies into a landing page so you can check it out. Again, this is just taking some classic, and I'll put the point up there so you can see where the frame of reference is for what we looked at today. There is some relevance, I think, combining together, bands and price action. Certainly is. The squeeze is a little difficult. I like the engulfing bullish and bearish is quite good. It really is. But I love the double top and double bottom. That seems to be a nice one. It doesn't have to be exactly a double top or double bottom, but it does seem to have some relevancy for a trend reversal. Any questions? If not, have a great evening, afternoon, wherever you may be. We'll be back on the air probably early August. I've got some UK travel for our UK division to go for in August, so I'll be probably broadcasting from over there. Thanks again for attending. My name's Steve Phil, AIQ Systems, AIQsystems.com or AIQeducation.com. They both go to the same place. Lots of information up there. Always posting articles and strategies when we get around to doing them. And if you're a stocks and commodities magazine reader, by the way, the traders.com is the website. The traders section in there where there's a strategy that's been discussed in articles. There's usually code up there for doing it in AIQ, done courtesy of one of our longtime clients. And so keep an eye out for that. And that's about it for today. Have a great time.
Thank you, Steve.
Thank you.